Good morning, everyone, and welcome to the European Cross-Up webinar. And we do have a German GDP came in just slightly above expectations. And just a little while ago, we did get German unemployment numbers, came in at minus 41,000, minus 41,000. The British Poll was a gain of 6,000, unemployment rate at 6%. And then prior to that, we did have Spanish retail sales an hour ago. Came in at down 1.5% with a GDP at actually a surprise to the upside 0.4%. Later on, which we have not come in yet, is Italian producer prices. You know, the Italian data is always late. And at the top of this next hour, Eurozone money growth. Coming to the States, we'll have a personal income and spending, as they used to call it. Now they could call it consumption. Core PCE, employment wages, and Canadian GDP, as well as Canadian producer prices. And we do get University of Michigan final numbers, along with the Chicago PMI. So a little bit of data today. Quick overview of where we stand here in FX land. It's pretty quiet. You can see here. Tight range yesterday in the euro. Cable continues to stay close to the top, but we are still, once again, yesterday also, maybe not a super tight range, but not generally what we've seen, but still restricted a bit. Aussie dollar, we actually did see some follow through from that sell-off we had from the previous day. You can see here the 50-day moving average held that. And then take a look at the Kiwi. Same thing, similar. Actually was held directly by the 50-day moving average. Then the dollar cat, a little bit more follow through here to the upside after holding that bottom. Remember that down there, sub 26. And we had some weekly support at the time at 25.58. So we came down to, I think it's 25.80. And then that 26.84 held 3 straight days before we saw this pretty good launch here. Dollar peso. Some good follow through. That 2043 we had yesterday held pretty well. The high was actually 2045 before we dipped back. Look at the dollar yen. Oh, some pretty good follow through here. Yesterday we had a resistance at 452. The market got as high as 445 before paring back a bit. It looks like we're pressing outside of that key weekly level of 452. The cash dollar index really didn't do anything. It's just stuck, not really going anywhere. With that, we'll move on to the Nasdaq. At the time, yesterday when we broke, I told y'all this was the area. Was it going to break lower? I said, all we've done is come down to test support. See you after this thing rallies. And boy, did this thing really rally. It really kept pushing higher and higher, really almost beyond the extremes. And look how high it went up in here. Now we came up to challenge at 13,395 before we really broke loose. I did say in the chat room, I thought there's a possibility we could see a slide into the close. I wouldn't think anything like a big fall, but a slide. And certainly we did see that slide, and actually a little bit more. Some of it that's in the chat room, like me, myself, Jane, Simon were short. And then we saw this thing, break lower. I was able to cover. Jane sold it well up in here also, and I think she wrote it. I had wrote it in bits all the way down here. But you can see here we've come back, we've retested the trend line, so everything's kind of holding. We're coming off of these lows. So, once again, like I said, I kept making the case all week long that portfolio managers would be looking to exit out. And I mentioned this yesterday. I go, not to be as a conspiratorialist when it was kept pushing hard. I go, but if you're a portfolio manager, you can goose the upside by just purchasing the indices, and goose it so that it'll help you to get out of some of your or sell some of your actual cash equities. And I thought that's what happened to me. I thought that's what they did. They push higher, and then look, once it gets up in here, cash equities could be sold, and then all of a sudden they give way on those indices, and wow, we came back and boy, did we push much lower in here. Take a look at Bitcoin. Wow, pretty good move here in Bitcoin. Look at that. We've actually broken beyond this 34.8. We're above it and we blasted, wow, all the way up to 37,253. If we can get a close above 34.8, then we can't say we've neutralized anything because look how much work had to be done. If we'd closed above 34.8 here, then I'd say, boy, we've basically neutralized the downside. Well, look, they did a lot of work. You got this low here with a hammer. You see that right here on the 2 hour, and then look. Now it was pretty good climb yesterday. I saw that and I go, okay, well it faded before the 34.8. Now we've blasted above this. I think you're starting to see some money start to come back in here, maybe from the Robinhood traders. But I think, like, remember I told you how key this 34,800 was. Once it got above it, look, they blasted it for what, more than a move of $2,000 before now we're come back. But they got to hold it. But it's just going to be the first step. Unlike here, what it would have like basically negated the downside and probably would have really started to launch up. Here, we've done a lot of work. We came down here. So although it's come a long way, but the key will be to hold 34,800. And then we'll probably still do, I would think, a little bit more work. But going into the weekend, maybe we can push a little bit higher. Might be some help as maybe some Robinhood traders start to go back to Bitcoin. Don't really know there. But that's where we stand here. Yeah, Arena says, what a bounce in Bitcoin, now up 10%. Yeah, that's what they were saying yesterday, too. It was up 10%, I think it was in here. And now we've come back and we've made another bounce. So that's where we're at right here. This pretty much in Nasdaq played out. Here when I came in, one of the things I was so upset when I came in yesterday was that, it hit all my technical targets, but it hit my technical targets, the last of them in the after hours. And I'm not used to trading indices in the after hours, with dealing with earnings reports in the after hours. So it was really frustrating to see when it came down, hit all these levels. I'm like, well, forget it. It's not all this come down here is retested, and I'm not doing anything. I'll see it when it rallies. No way I expected it. I was like, okay, here's that first level. Okay, we'll see what that's about. And pushing up in here, this is getting a little interesting. No way I thought this thing would push it higher. But when it was up in here, and I was short at the time, thinking, wow, I'm going to stay short because I really think that this thing will eventually break lower. I'm just going to go in and stay short. I didn't know, and I thought finally when it took a while to break down. You can see here on the 30-minute, it took a long time, and it was pretty frightening, pretty much here. And then as we started to break, it was still kind of holding, still kind of look, it broke here and it jumped right back up. And then we finally started to break. And that's when I said, you know what? I think we can see a slide. Here was that first, what I called, I think I called it a drift target. That's what I said. This is your first drift target for them to go down to. And they did. They exceeded it. And then they came back up. And then finally we started seeing this thing come apart. And it just kept on going as we go into the week's close. So that's it. Bear with me. So let's go on and move into the news, and then we'll get into the analysis. Everything's kind of played out overall, what we're looking at. I didn't stay short, though. Um, I had pretty decent, okay day yesterday, so I guess I could have tried to ride this, but this kind of surprised me how well it was able to hold. So once we broke here, I thought they may congregate, maybe move up a little bit higher, then break lower, but obviously we saw that fall through here in Asia and Europe. Let's go and take a look at the Take a look at the news. Australian and New Zealand dollars bounced from the lows and pondering RBA risks. Australian and New Zealand dollars were catching their breath on Friday after recovering from a sickening slide from the previous session, although both were nursing losses for the week. Aussie held 76.67. The bounce took the currency book back above the chart support of 76.45. Kiwi had an equally wild ride to stand at 71.65. Aussie was undermined in part by a sharp fall in prices of iron ore. It faces homegrown risks where the RBA holds its first policy meeting of the year, with most analysts tipping it will recommit to keeping rates at record lows. Most also expect the central bank to extend its $100 billion bond buying program. Extending the bond buying program is the path of least resistance. It will ensure that the policy decisions do not put any undesired pressures on the Australian dollar. The RBA has plenty of opportunity to outline its thinking, with Governor Philip Lowe giving a speech on Wednesday and appearing before Parliament on Friday. So just want to hurry up and get through this. This news, it's nothing of any consequence. Safe dollar haven looks to end week strong. I keep getting this keeps making me laugh. In strong? What do you mean in strong? The dollar index hasn't done anything. It still continues to remain weak. I mean, I don't know what these guys are looking at. Maybe they need glasses. That is not strong to me. Okay, look at the fall that we've seen here in equities, and look, this thing hasn't moved. This market is not strong, so I don't know what they're talking about. And like I said yesterday, I reiterate, I said yesterday, I stand by it again today. This move had nothing to do with the dollar index. If it really did have something to do with the dollar index would be traded at around 92.5, 93, and the dollar index is still sitting flat, basically. So anyway, the dollar edged higher on Friday, heading for a weekly gain as lingering jitters about a coordinated assault on hedge fund short positions in the U.S. boosted demand for safe haven assets. The greenback has benefited from safe buying to start the week. At the same time, COVID vaccine rollouts globally have run into trouble. The more medium-term questions is the U.S. fiscal policy, and the greenback also advanced to 104.52 yen. However, many analysts expected the greenback to return to the downward trend that saw it nearly lose 7% of its value. Okay, nothing new there. Okay, so we'll just go on, hurry up and move into the analysis. And take a look at the year dollar. Your dollar stayed within a tight range on Thursday. You can see here. The 50-day moving average moves to 21.26 on Friday. A close below that 21.03 will open the door for the move lower. So there's no changes here. It's going to be 20.37 on the downside, 21.70 on the upside. No changes here. Moving on to cable. Same thing here with cable. We haven't done anything. Look here. We did pair back here. It says 20-day moving average. And once again, I really don't do too much with moving averages. I just had this on from, the looking at Fangman. But we haven't done really a whole lot here. We're still with the push to the upside, but everything still remains fairly quiet in cable. So no changes here in cable, 35.75. If we do get that dip, we're actually going to move this a little bit higher. It's going to be, if we were to break a little bit lower, I just don't really see that happening. Anything's possible, but we'll move it up to, that's why we had that 35.75. Unless things come apart, we're going to move this up right here to 35.96. Other than that, no changes. Aussie dollar. Okay, Aussie saw a downside follow through on Thursday before recovering to post a hammer. You can see that. Support on Friday will be 75.69 with resistance at 77.14. I'll give it a little bit more room. Take a look at the Kiwi. Kiwi broke lower on Thursday before finding support at the 50-day moving average. Support on Friday will be 70.98 with resistance at 72.17. Move that just a bit higher. On to the dollar CAD. Saw some good follow through here on the dollar CAD. Dollar CAD continued its push higher on Thursday. Friday's resistance will be 29.07 with support at 27.91. And it doesn't look like Friday will be that eventful, at least in FX land. Take a look at the dollar peso. Dollar peso closed the day with a medium-legged doji. You can see right here. Friday's resistance will remain the 2043. That might be a bit of a stretch, but we'll keep it at that 2043. We supported 2014. Onto the dollar yen. Oh, dollar yen is really pushing higher here. Finally, after this breakout, really starting to push higher here. Dollar yen closed above 420 on Thursday after challenging the 452 area. You can see here that was resistance. Resistance on Friday will be 462 with support at 405. Well, this thing is ramping away. So support would actually be the close at this point, which can be 425. And the cash dollar index, no change in the cash dollar index. That's to say, this is laughable. You know, they're going into the safe haven. The dollar hasn't moved anywhere. All it's done is picked itself up the lows. It hasn't gone anywhere, and we haven't even look at that. I mean, if we look at when you look at what happened in equities, this thing should be trading at the bare minimum above 92.17. We can't even touch 91 on an intraday level. So I don't know what people are saying about, oh, there's going to be this big dollar short covering rally. You don't see it here. So no changes here in the dollar index, 90.92, and on the downside, 90.40. Onto the cross rates, still holding up, although a bit of a tight range. The only difference is here we'll go right there for the buy. Actually, that's where it's at right there too. Well, almost, which is 75.11. And on the downside, I don't think it's going to go there, but that would be support 74.49. Onto the euro pound. Stayed weaker. When we challenged the upside, we said this was resistance. We made it. We said we'll just go with the technicals, keep it simple. Which that 88.75 kept it in check. The high might have been 76 or 77. We came right back down. We're trying to make a run back up. We'll stay with the 88.75. Maybe sterling loses some strength. And support is going to be yesterday's low right there, which is 88.26. Onto the euro odd after holding here is trying to push up a little bit higher. We did spark up in here and then we fizzled big time. So resistance is going to be right there, that high, which is 58.78 for today. Downside right here, that wick, 57.46, although it looks like we're going to hold after all. Onto the euro Kiwi. Same thing here. They challenged at 70 and then they fizzled. Support's going to be 68.47. On the upside, it'll be the wicks right there, 69.75. Onto the Aussie yen. And upside resistance is just going to be that close right there, that body, 80.34. Support is 79.59. Onto the guppy. Whoa, this thing is still blessed and higher. Now that's a bit of a surprise here. We can take a look at the weekly. There is this little wick right here, which comes in at 43.60. Let's go with that. And daily support, let's go with the 2-hour chart. Right there, 42.69. Lastly, let's wrap it up with the sterling odd. Did see a pretty good push yesterday to take out some stops, but we're kind of running out of gas here. Resistance is going to be this high wick right there. And actually, we got above it this morning, but that'll be at 79.25. And support just below this low here, and we'll go with that. 78.38. And there we go. We'll take a look at the Fang Man. Here's Apple. Irina asked about Apple in the chat room yesterday. I told her, I don't really have a real opinion, but I thought that we'd be back down at 134 for next week. Well, heck, we've already right now in the pre-market. I was already at 135.09, and yesterday we were trading right here, right there. Was 141 and 140 and change. So we've already, I said we'd revisit 134. We're already at 135.09. So we're actually less than $1, about $1 away from hitting that 134. I don't see anything. I'm not even paying attention to the Fang Man on the daily. I mean, like I said, all of it was just, I think that, as I mentioned before, is portfolio managers are locking up stuff and gotta wait for a serious dip in these charts. Why? When she asked me, I'm like, I don't know, but I look for them to retest 134, which was, not too far away from it. I forgot what when they got the economic report, the earnings report, that was a low, which was there you go, was 134.55. So we're just almost there. we're almost 50 cents away, or were just a few moments ago, 50 cents away from those earnings lows. And it was really good news. So I'm not saying the Apple's going to sell up big time, but we may eventually over time get down to that key 129 area. May see a bounce here at the 131.87, but not really looking at anything in Fangman. I think right now those indices are trading their own way, and we're going to see bigger moves down the road on all these stocks as they pair back to factor in the risk. It looks like GameStop made a run here. You can see here we came up to 470 and now we're 386. Pretty good solid move. Other than that, I really don't see anything really changing. We've made most of the moves. I think eventually we may be a little bit lower next week. But if you look here on the 2-hour chart and NQ, you can see here, as we said before, we just come down here and tested that trend line. This rally was bananas, and it held up so well. I thought we could pull back, but I didn't want to stick around. But boy, did we come off. And then we saw that follow through. I think over time we will have to break lower. I mentioned yesterday in the chat room, I'm looking at around 12,600 eventually. I don't know how quickly we'll get there, but we'll see what happens. We could maybe see them hit some stops and try and take out this trend line. I don't know. But that's all we have for today. We'll see you in the chat room later. And thanks for joining us here in the European Crossover webinar.